Good morning traders, I'm James Harte. Welcome to this Orbex Market Insights video for Wednesday, March 4th for the metals and energies markets, where we will be focusing on gold and oil. So a little word about the fundamentals then first of all, and it has of course been a very busy week for both the metals and energies markets. The ongoing coronavirus outbreak is continuing to dominate price action, decimating risk appetite last week, which has obviously had big consequences for both gold and oil prices. Now this week, the main factors to be aware of for metals and energies traders are the Fed and OPEC. So on Tuesday, the Fed took the historic move of slashing interest rates by a further 0.5% in a bid to help buffer the economy against the economic downside from the coronavirus. The market had been pricing in a cut at the March meeting following a very dovish, unscheduled statement from Fed Chairman Powell last week. The move has seen gold prices rising as the US dollar falls, and the unscheduled nature of the rate cut, which was made away from the typical meeting schedule, highlights just how concerned the Fed is over the impact to the US economy from the ongoing virus outbreak. Now, it's been a big week for oil markets also. Crude oil has been recovering strongly this week, in line with the broader rebound seen across risk markets, supported by fresh central bank easing. We've seen the Fed easing, the RBA easing, and there are also expectations that the Bank of Japan might be next to follow suit. Now, oil traders are expecting that OPEC will announce further measures when it meets on Thursday this week. Crude prices have been down heavily over the last month, and traders now expect that OPEC will extend and quite possibly increase production cuts at the meeting to help lift price in the face of the ongoing economic uncertainty surrounding coronavirus. Okay, so let's take a look at some technicals now then. And please remember that when trading, losses can exceed profits, and any opinions shared here do not constitute investment advice but are for educational purposes only. So, starting with gold on the daily time frame here then, and you can see that the rally in gold this week has taken price back up above that 1624.97 level, and we're currently challenging the bearish trend line from year-to-date highs. Now, while we hold above the 1624.97 level, focus is on a further push higher, with the 1657.54 level the next key resistance to watch, ahead of the year-to-date highs at 1689.39. So you can see the extent of the rally this week, with price essentially reversing all of the losses suffered on Friday. Now, if we drop down to the H4 time frames, you can see just how strong this bullish move up has been. And again, we are trading above that bearish trend line from the year-to-date highs. So for now, focus is on a continued push higher. Given the ongoing uncertainty around the coronavirus situation and the two-way risks that it implies, however, it is important to note that we could see a further move to the downside, and the first levels that we'll want to watch will be the 1624.97 region with the 1610.94 level beneath. Much lower than that then, you can see we have the 1555.38 level, which comes in beneath the current year-to-date lows. So these are the levels that I'm watching at in gold for the moment, and again, for the time being, the key thing is whether we end the week above or below this bearish trend line. Okay, moving over to the oil daily chart first of all then. And again, you can see the scale of the sell-off this year moving down from highs around the $65 mark to the lows just above 43 this week. You can currently see as well the rebound that is taking place in oil, though this has stalled for now. Okay, so a few key things to note then for the oil market. You can see that price is trading in this very well-defined bearish channel that's framed the sell-off from the year-to-date highs. And you can also see that the current lows in the move stopped just short of testing that 42.40 2018 lows. So for now, while we remain within the bearish channel, and especially while we remain under this 49.56 to 50.69 region, which is a very major pivotal level in oil, you can see that was tested as support quite a few times over 2019, and again at the start of this year before breaking down. So while price remains below that level, focus is on a continued push to the downside and a likely test of that 42.40 level. If we drop down onto the H4 charts then, so you can see that the current recovery has taken price back up into the middle of this bearish channel. Now, although the outlook does remain skewed to the downside in the near term, it is worth pointing out that with OPEC meeting this week, there are some upside risks. So if OPEC does deliver above and beyond the current level of market expectation, then we could see a pop to the top side. And if price breaks above that bear channel top and this key 49.56 to 50.69 level, then the area I'm going to be watching next will be the 54.69 resistance zone here, made at those February highs. Okay everyone, thanks for joining me. These are the levels that I'm looking at in gold and oil. Remember, it is a very volatile market out there at the moment, so please be sure to stay tuned into the blog each day where we'll be updating you on all key market developments, doing our best to serve traders responsibly. Okay, thanks and goodbye.